Hey guys, Ross Gibbons here with the Weekly Stock Market Chronicles. Today I want to take a look at what I call cannibal stocks, and I'll give you an example. So the company we're going to look at today for illustrative purposes is Coca-Cola Enterprises, ticker symbol Charlie Charlie Echo, and this is not the monstrous Coca-Cola. This is actually the company that owns the bottling right. So it's the bottling component of Coca-Cola. But this stock is gone from a low in '09 of around $7 a share to the $50 per share range today without much changing except for its stock buybacks. And I want to show you the power of stock buybacks, what I call a cannibal stock, and how it can benefit you as an investor. So, when I talk about cannibal stocks, what I mean is a company that is constantly buying back their own shares. And here's how that works. Let's say, for example, a company has 1,000 shares outstanding. Okay, let me bring you to a blank page here. Let's say there's 1,000 shares of a company out there, just total outstanding, and you own 10 shares, so you own 1% of that company, right? Well, if the company bought back 500 of those shares on the open markets, they took company profits, bought back their own stock, and just retired it, now all of a sudden there's only 500 shares outstanding. Okay, the company's still worth the same amount, but there's only 500 shares. So the 10 shares you own are now worth 2% of the company. Does that make sense? Because there's only 10 is 2% of 500, where it was only 1% of 1,000. So this does a couple of things. All of a sudden you own more, right? So the earnings per share increases, the book value per share increases, and generally the stock price increases as well. So I want to show you the hard numbers of Coca-Cola Enterprises here, and don't let this spreadsheet scare you off. I've highlighted the levels I want to look at. So the first is net income, just total earnings, right? What do they put down? And I want to focus on kind of '09 until today. So we're looking at these figures right here that are highlighted in yellow. So as we can see, the company earnings going from 730 million down a little, up a little, down a little, roughly the same, right? I think we'd all agree they haven't. They're not growing, they're not shrinking. They're somewhere in the $600 to $700 million per year range. And actually today, they're earning less than they were back in '09, right? Which makes sense. But because they are buying back their own shares at such an alarming rate, when we look at those earnings, the same numbers on a per share basis, look what's happened. Earnings per share, even though total earnings have shrank over this time, have increased each year. And today's figure of $2.56 is a 71% increase from where it was in '09. So earnings per share are up, but total earnings are down or slightly even. And it's a remarkable thing most people don't think about. But I mean, even if we look at the company itself, the total market cap or the share price times shares outstanding, the size of the company has gone up less than 10%. But if you owned the stock, you're up about 600%. And the reason being that the company did a smart thing with profits, bought back their own shares. What that does is concentrate the existing shares that are out there, making them worth a larger portion of the company, which increases earnings per share, which increases book value per share. It improves almost all the metrics and can be very profitable for investors. So this is the reason I like to find cannibal stocks.